Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including at Mining Dawn, Jared W., and Paul M. On the show today is Heye Daun, co-founder and CEO of Osino Resources, a gold exploration company focused on their projects in Namibia. Osino is a position held at SmithWeekly Research. The company is listed on the Toronto Venture Exchange under the symbol OSI and also on the U.S. OTC markets under the symbol OSIIF. Heye, welcome back, and how are you, sir?
Thank you very much. Thanks for having us again. I'm well, thank you.
Well, Heye, let's start off with you personally for a moment. Are you pretty much splitting your time between South Africa and Namibia at this point? And how are things in both countries with COVID, protests, disasters like that we're seeing?
Yeah, sure. So unfortunately, I'm not spending my time between Namibia and South Africa because I'm locked up in my house in Cape Town in South Africa because so South Africa has a very high infection rate. I think we're in the top 6 worldwide by now. We've got about 400,000 cases. We've got a low death rate, so it's nothing worrying, even though the international media is sort of portraying it as being very dangerous, etc., which it isn't really. But from a business perspective, with reference to Osino, it means we cannot travel, neither internationally nor to Namibia. But that's okay because we have a very strong team in Namibia who are basically managing the exploration. So I've been working quite productively from my home here in South Africa. In Namibia, on the other hand, the COVID situation is quite manageable. We've got a low level of infection, a couple of hundred cases, no lockdown. And people are operating freely. So luckily, we financed sufficiently earlier this year. So we are very active, and we got a bunch of drill rigs going, very, very active.
Yes, I hear Namibia is doing pretty well and really no issues coming out of there at all. So that's fantastic. I think it points to some degree how the jurisdiction has handled things, and it's just a good jurisdiction, hands down. Well, where are we headed with gold prices here, Heye? All-time highs very near. Do you see that we'll be hitting that and heading higher, or do you see that prices might correct here?
I must say I'm obviously not an economist. I'm just a dumb mining engineer. But I think you don't need to be an economist to see where prices are heading. I think we've got a long way to go. I mean, you just look at the fiscal stimulus that's being applied across the world. I forget the number, but it must be, I think the total quantum is something like 5 or 7 times as much paper money being thrown into the system as they did in 2008 after the global financial crisis. So my feeling is we ain't seen nothing yet. I think this is just the beginning. I think it's obviously very good for companies like ourselves where markets are, very supportive at the moment and probably will stay so for quite a while.
Certainly agreed. And with a little bit of patience, I think everybody will start to see that we're certainly headed higher from here. Well, speaking of money being raised, you guys have raised about 32 million Canadian so far this year. Where do you stand on cash now, and how long will this capital last the company from here?
Yeah, you're right. We raised twice, once in January and then unexpectedly again now recently. So our cash position right now is in the region of, let me just add it up, around about $25 million in the bank. That's before warrant exercises. I mean, we've got a bunch of warrants that are already in the money, which come due from about September, which adds quite substantially to that cash position. So some might argue that it's too much. Some people felt, the second financing we did was maybe taking too much. But I disagree with that. I think we did it because our projects have evolved so well that we expect a substantial increase in our activities. And so we've just basically positioned ourselves for that. So you asked me how long will this money last? Well, basically it's going to allow us to drill flat out with many drill rigs for the foreseeable future, literally for all of this year, all of next year, including feasibility studies, development studies, PEAs, acquisition of surface rights, etc. So we really well set up, and we are financed for the foreseeable future, possibly all the way into development.
Well, very good. We don't know exactly what's going to happen with the company as far as what happens on the ground and what might be needed as far as expenses going forward. You certainly have a good position here, arguably at some good prices as well. So what is the current breakdown of the major shareholders here? You've got Resource Capital Funds, you've got Ross, yourself, management. Is there anyone else here that you want to mention as far as major shareholder, and what are the current ownership percentages, roughly?
Yes, so I think you summarized it quite well there. Ross is still the biggest shareholder. He after this last financing, he went down to around about 13%, 12, 13%. Resource Capital Funds is next, just under 10. Then different accounts associated with my family and Alan Friedman, my co-founder. We've got about 8% or so. And then it's actually the notable new names have been quality blue chip institutional investors like Earth Resources, Merck, Rothschilds, the real who's who of North American and European mining investors that have come in the last two financings. And they all hold, varying percentages. And then we've got quite a big component of Swiss and German high net worth, and then a bit of retail. So I think that sort of sums it up. So importantly, about 40% of the company, close to 50% of the company actually, is held by insiders and sort of people or entities closely associated with the insiders. That's very important in terms of controlling the destiny of the company going forward.
And Heye, with the capital raisings that have occurred and all the events that have happened, where are you at as far as how many shares you have? And can you share with us at what cost do you have your shares at this point?
Of that 8% that I mentioned to you, about 2/3 of that is associated with me and entities closely associated with myself, like my father and some others. So basically, we participated in every financing. I would say, I would have to give you an exact number and actually calculate it. So I speak under correction here. But if you work it out, the weighted average cost probably around 40 cents, 35 cents, around about there. With the financings, just to give you a sense, so we did our first seed financing was done at 20 cents. We then did one at 38. RCF came in at 48. We did a small down round last year at 35. And then we raised money in January this year at 78. And then the last financing that was done now recently was done at $1.10. So that gives you a sense. I would say the average entry price of all the money that has come in so far is probably in the 70s, mid 70s, around there. Sorry, I haven't done the numbers, so obviously speak under correction.
No, I think that puts it into a pretty good perspective of where things are at, and well done on your side. Well, let's talk about Twin Hills. Overview, current results for us, and the plan to extend and define further gold mineralization for the rest of the year. Can you just go over what's going on and how things are shaping up?
Yeah, thanks. Twin Hills is obviously, that's the rock star. And I say that because it's going to become a substantial, mineable, economically mineable resource very soon. And we will demonstrate that through a maiden resource report 43101 compliant, which we plan to put out by the first quarter of next year. We're pushing very hard. There's a small chance we might be able to do it earlier, but give myself a bit of gap. So that's going to put on the book a substantial resource of, I believe, and I hope, and obviously this is non-43101 compliant, so take it with a pinch of salt or with some caution, but I believe it's going to be between 1.5 and 2 million ounces. So that's substantial, and that's just the starting point. You asked me about the ongoing exploration around it, which we're going to do, which will make that bigger, no doubt. So at the moment, we've got 4 drill rigs on the ground. We're in the process of mobilizing an additional 2 drill rigs, so 4 diamond and 2 RC rigs. And that will be focused, or is focused, on resource definition drilling, expansion drilling. That's what we're doing right now. That's basically to turn these ounces that I just mentioned to book, and to get the drill spacing down to 43101 compliant levels. And then 2 additional RC rigs, which we are mobilizing very soon in the next week or 2, possibly 3, which will do exploration. Something quite exciting has happened in the last few months is we did an IP survey, and we're going to put out a press release about this in the next few days. But that has been very exciting. I mean, I can't give you the details, but everybody knows. So this IP survey has given us a whole bunch of new targets, which we're going to evaluate with percussion drilling. So our confidence in Twin Hills as a project or as a large gold system has grown in leaps and bounds and continues to grow. So we've done so much technical work over the last year, especially, or even 6 months, I would say, that our understanding of the geological controls and so forth has evolved tremendously, and our confidence has improved tremendously too. So I truly think we have a potentially world-class gold deposit. I believe it is one of the few African discoveries of the last little while that is likely going to be turned around quicker than many other of the sort of other African discoveries. And we're going to put out some news and some more detail on that in the next few weeks. But basically, like I said, I think maiden resource within, call it 6 months from now, PEA shortly thereafter, and ongoing exploration to make it bigger and better all along.
We know that management is looking to copy the Auryx success, but what is the size of the deposit being sought at Twin Hills? And do you believe that the results so far point you to obtaining that goal or potentially even more success this time around with Osino?
I think we will have more success without a doubt. Well, I can describe that very simply. I mean, Auryx Gold had a 1.9 million ounce resource with a PEA that we sold to B2 Gold in 2011 for $180 million. So that was about $100 an ounce from a valuation perspective. So our early exploration, I think we said this in one of the press releases, our early hit rate at Twin Hills was quite a lot better than the early hit rate at Otjikoto. So we got better results, thicker intercepts, i.e. likely larger volume, although in the beginning slightly lower grades, but that's coming around. So we were confident in the beginning that our project would have a legitimate chance to become similar in size to Otjikoto, which is the B2 Gold one. I believe now it's going to get bigger. And I say that because of all these extra targets that we have, all this extra drilling that we've done, and all the drilling that we're doing right now. So if you relate that back to the valuation, I mean, back in 2011, we were in a descending gold price environment. As a management team, we didn't have track record. I didn't have a track record in the public markets. And Namibian gold or Namibian gold mining didn't really have an international track record. Now all of that has changed. We're in a hot and rising gold market. Our team has a lot more track record. We have a lot more knowledge, and Namibian gold is on the map. So I think not only will we likely find more resources and better resources than what Otjikoto had, what we did last time around, I also think that our corporate structure or architecture is better. And so I think we also have a good chance of achieving a much better valuation than we achieved back then. My response to your question, yes, I think there's a very good chance that we're going to improve and better what we did last time.
Do you see that's reasonable to have a goal in mind to delineate in advance a 3 million ounce deposit potentially within a 10-kilometer radius at Twin Hills?
Of course, I can't just state these numbers because I'm bound by 43-101. But conceptually speaking, no doubt, I think in time, I would be very disappointed if Twin Hills doesn't grow to that sort of size. I think as a starting point, 1.5 to 2 million ounces is my starting point, and I think we will be there quickly. But like one of my exploration buddies sort of facetiously said to me the other day, the first million ounces is always the most difficult to find. Thereafter, it gets easier and easier. And there's a lot of truth to that, actually. We know that the footprint that we have at Twin Hills Central already promises 1.5 to 2 million ounce potential. That's not even taking depth extension, etc., and other things into account, which we are going to be testing, which we have tested already through deeper drilling where we're waiting for the results. But laterally also, we have all these brownfields satellite targets, some of which have already returned mineralization in a 5 to 10 kilometer radius from Twin Hills Central. So all of that is going to be drilled in time and will throw up more ounces. And therefore, I think your sort of 3 million ounce conceptual target is not far behind the horizon.
Well, the focus, obviously, at this point, you guys are mainly focused on Twin Hills. Will that remain to be the case? And then what is your expected timeline from here to get working on potentially a PEA? Or is that really the focus, is to get moving down the road of a PEA as quickly as possible?
Yes. So you asked me firstly, the focus is Twin Hills Central. Yes, certainly we need to put the resources on the book because at the moment many people still see us as an exploration company, whereas we're actually already a project or a resource development company. So in order to make that transition, we need to get substantial resources on the book. So that's the first focus. And with that also comes the PEA. I think the PEA is important to me, not because I'm hung up about a PEA, because I mean, I think under normal circumstances, I would have delayed the PEA. I would have said, let's do one later. But nowadays the rules have changed. You can do PEAs as often as you like. So as the resource grows, we'll probably do another PEA later. But there's a unique reason. Sorry, just to digress. There's a unique reason why we have to do the PEA soon, and that is that there is expected M&A in our neighborhood. You know, we have an operating gold mine 20 kilometers away from us called Novichok. It used to be owned by Anglo. It's now owned by a sort of former private equity group who are looking to sell it. And that will shine a big spotlight on our whole district. So in order to be ready for that process, either as a participant, let me say, it would be advantageous for us to have economics on our own projects out in the open, and that's why I'm forcing this PEA. So basically, we're going to push that PEA out as soon as we can after the maiden resource. I think a couple of months after the maiden resource, we should be able to get the PEA out. We're about to appoint the PEA contractor. It's going to come out in a press release who it is. So I don't want to say it yet, but it's a very credible, respected group that's built lots of gold mines in Namibia and in West Africa. Who's going to help us with that? So I guess I'm sketching a picture here of, behind the scenes, very, very active work going on to define and expand this Twin Hills project. But then at the same time, my last point, and then I'll pause. We are doing ongoing exploration on the rest of our pipeline projects also. So that's not being left behind.
Yeah, and speak to that. Are there any plans for the rest of the year at Otjikoto East, Gold Cuppy, Oasis Wedge? What's the plan there?
Yes, so Otjikoto East, definitely we will do a bit more target testing. We also doing early stage regional work like soil sampling, concrete sampling, that sort of work at some of the other licenses. And then Gold Copper is an interesting one. We will definitely do some work there. It needs more drilling. It's a different style of mineralization that's marble hosted, so it tends to be higher grade, but it doesn't lend itself to bulking up. So it's not a multi-million ounce potential type of project or prospect, but it does have potential. So we will definitely go back and drill it. However, for now, in the next 6 months, we're so focused on getting as many holes as we can into the Twin Hills system as a whole that's gobbling up all our resources. So I think we'll revisit this closer to the end of the year. But yeah, we definitely will drill more at those other projects too.
Okay, and why you guys are working on Twin Hills is kind of the primary focus here and possibly the core asset coming down the pipe. Is there any interest in joint ventures with companies, or does Osino just plan to keep everything to themselves and continue to advance?
You asked the question, so I'm going to get into it, even though it might be a little bit too detailed for a radio show like this. So I'll try to be brief about it. But so we are definitely interested in strategic combinations. And one in particular, because basically this gold mine that's next to us is operating, has got all the infrastructure in place, is going to be available for sale. We have growth, and we are going to build Twin Hills into a standalone potential gold mine. But the combination of the two has very substantial synergies and re-rating potential. We could consider at some stage, for example, hiving off some of the non-core assets that we have. I mean, we haven't got any discussions to that effect ongoing, but it's a thought. But we spoke in the past about strategic JVs with producers or materials, basically strategic partners coming into Osino. We were interested in that because we saw the producers as a source of validation and capital. We don't need either of that anymore. So therefore, even though we're speaking actively to a bunch of companies out there who've taken an interest in Twin Hills, we're not very active on that front. However, there's one particular strategic combination that we are interested in, and that is with the neighboring gold mine that's only 20 kilometers away from us. Because if you look at other examples elsewhere in Africa and in Europe where you put resources with infrastructure together, you achieve a significant valuation re-rate. I think one such example, for example, Rupert Resources in Finland. They've got a mill and resources. They're trading at about $250 an ounce or $300 an ounce. You could also look at, there's an African producer called Teranga. which had a mine, and they acquired a project from Barrick next door. Subsequent to that deal, a major re-rating took place. So that's proof that if you were to put Osino's exploration ground together with production next door and infrastructure, you might achieve a similar re-rating. And I mean, if you apply those numbers to our current valuation, we currently value it at about $50 per ounce. If you assume we're going to get to 2 million ounces, let's just play this game for a moment. So I think we could re-rate to $100 an ounce just organically on own strength. If you then add a producing mine next door, I think you could re-rate another $150 an ounce quite easily. That's $300 million worth of market cap. So can you see that's a very compelling 1 + 1 is much more than 2 scenario that we're busy working on. We can't entirely control this because that sales process has not opened yet. We believe it will start later this year, but that's a key catalyst for Osino in the next 6 to 12 months.
So what you're suggesting is with Twin Hills, Osino provides that expansion upside for any company that's looking to buy the neighboring mine operation. Is that what you're getting at?
Yes, I think so. You know, I'm saying that ultimately the different parts of this puzzle should come together. So we've got the growth part. The mine has got the production part. I mean, it all depends. I can't predict how M&A will play out. It's possible that sales process may be successful, it may not be. We may make a bid for that mine opportunistically. We may get together with somebody else and do it jointly, or maybe the Osino management team puts a bid on that mine together with serious international capital like Ross Beatty and others. Whatever, there are many permutations possible, but all of them are advantageous and beneficial to Osino. So I think that's the key. I think the key as an investor in Osino, you've got 2 major backstops. One is the resource that's coming, that's basically in the bag. I'm speaking a little bit loosely over here, but we just have to go through the motions of drilling it out. But that resource is in the bag, and our valuation does not reflect that size of resource yet. So that's the one major backstop insurance for investors. And the second major backstop is this expected M&A, where we are perfectly positioned. I mean, everybody in our sector speaks about M&A, but I think we've got a unique situation that's where it is much more likely that such M&A will take place in a specific sense, and not just as a general statement for the sector as a whole. So I think those 2 factors, to me, give me a lot of confidence in Osino as an investment proposition.
Yes, and the capital backing also seems to be there. Along these lines, can you just speak to the relationship with B2Gold at this point? I mean, there is a history there. Are you guys keeping in touch with B2 for obvious purposes as this continues to play out?
Yes, for sure. We have a very good relationship with B2Gold. A lot of the people when I sold that project to them, a lot of the people that I employed are still there. So we've got good relationships at the operational level. I know Clive and his executive team quite well, so we've got ongoing discussions with them. In fact, we actually under CA with them, and I can say that because they generally take an interest. Their exploration group, Andy Brown and them, so you might know them. They take an interest in emerging projects. Having said that, though, there's nothing formal going on. I mean, B2Gold, obviously, it's a major company now, $8 billion market cap, so we're quite small. B2 needs things that move the needle. And, with the success that they've been having in Mali, they're quite preoccupied there. But I do think once we put, say, 2 million ounces on the book or thereabouts, I think it's going to get a lot of people's attention. It will certainly get B2's attention, but it will get other people's attention too. In fact, there are a number of other companies that are talking to us on a technical level, just because the discovery that we've made and how it's evolving is quite something. It has been quite an achievement, quite a feat, and I think a lot of companies have taken note of that.
Let's step back here to bigger picture. I'm assuming that Osino plans to remain exclusively in Namibia. Can you confirm that, and why do you see that as important?
Yes, so I'm confirming that we are going to stay focused on Namibia. I think it is important because I believe strongly in one should stick to your knitting. I believe in focus, and I believe diversification is only necessary to mitigate risk. And I think for us, the risk has largely been mitigated already because we are now fully financed, and geologically, technically, we've been de-risked substantially. So therefore, I think for a company like ourselves, you tend to get a better rating if you're a pure play in inverted commas. And I think in that regard, it's important to stay Namibia focused. But of course, we see opportunities on a regular basis, and we evaluate these. But we haven't seriously considered going anywhere else. I don't think we will anytime soon. We've got our hands full delivering what we have. And to be honest, you don't find projects like Twin Hills every day. It's going to be hard to find another project like that just overnight. So I think the best way for us to add value is to deliver Twin Hills, the overall Twin Hills system.
And Heye, what is the exit strategy for Osino, and what is the time frame that you would like to see? Are you seeking to develop an attractive discovery with a buyout in 2 to 3 years?
I think it's fair to say that. I mean, I don't want to talk about buyouts. We focus on building a project here. But conceptually or generally speaking, I do believe that producers are better at building mines than juniors. I also think that, if you believe in the Lassonde curve, which I sort of believe in it, not entirely, but that under the sort of the hypothesis of that curve is that once the resource potential has been delineated, then your share price usually languishes for a while whilst you define that potential. And I think conventional theory or conventional wisdom is that that's the time, or just before that time, when you should sell. Now, where we are along that curve, I don't know. We're still on the upward trajectory, on the sort of parabolic graph up. So I still think we have quite a lot of time still. We certainly will not be transacting before we have delineated the true potential of what we have. I think it would be foolish to do that. But we also know, and I think we've proven that before, it's always important to leave some on the table in order to do deals. I think with current high valuations, it's going to get more and more difficult for majors to justify deals at some stage when the valuations are too high. So one just has to achieve the right sweet spot. And ultimately, I can't tell you what that is. It's substantially higher than where we are currently. But at the right time, I think if we get the right offer, I think we would go for it. I mean, you must remember also, I'm a Namibian citizen, so I've got a big patriotic citizen hat too. So I'm very concerned about making sure that the sort of strategic project is safeguarded and shepherded in the right direction for the country. I think that was, for example, with B2Gold. Very, very pleased about them ultimately acquiring us because they just did justice to what I just said. They became such an excellent corporate citizen in Namibia. So I think it would be great maybe to repeat something similar to that in the next little while. But ultimately, it's going to be driven by shareholder value.
Well stated. For potential investors who are listening on the sidelines, what would you say to them at this stage for the company? You've got 110 million Canadian market cap, approximately, current price levels. Why should they consider Osino now?
I think now is the time to invest. Like I said earlier, the risks are largely mitigated. The biggest risk, the geological risk, is largely gone. I mean, to drill out a resource is basically a mechanical process. Plus, there's lots of geological upside left. Secondly, the financing risk, which is the second biggest risk for juniors, is totally mitigated. We are financed to the hilt, and we know what we're doing. And we are actually on the cusp of the most exciting time period in any junior mining company's life cycle, because we are, in the next 6 months, we're going to put on a substantial resource. We're going to have lots of drilling. We've got 4 rigs, another 2 rigs adding, so we'll have lots of results. Lots of technical results, feasibility studies, PEA, etc. So the next 6 to 12 months are going to be very exciting on their own, plus a supportive market backdrop. So I really think Osino is right now, because our share price is not reflecting a lot of that project development stuff that I told you about yet. But that's going to happen in the next 6 months.
And Heye, best way for the investors to reach out to you and the company?
The best is probably to email me directly. I have no problem. I try to respond to everyone. So I'll just state my email address quickly. So it's HDAUN, so my initial and then my surname, at osinoresources.com. Alternatively, Julia Becker, which is J Becker at osinoresources.com. She's our investor relations manager. She's based in Vancouver, so a bit of a better time zone. And you can always ask Julia for my telephone number. I do speak directly to a lot of investors. I'm quite prepared to take calls too. And of course through platforms like yours, Andrew. So I really appreciate this sort of interview.
All right, sir. Well, keep up the good work, and we look forward to seeing more. And again, Heye, Thanks for coming on the show.
Great. Thank you very much for having us again.